Hello, I'm Andre Kassaman, Chief Executive of the Trade Finance Distribution Initiative, and we are here at the Investor Day. I'm here with Niels and Mark. Welcome. Please introduce yourself.
Hi Andre, very happy to be here with you and Mark. I'm Niels and I'm one of the founders and the COO at TradeTech.
Very good, thank you.
Hey Andre, thank you very much for having me. I'm Mark Abrams, I run the working capital business at Trade Finance Global.
Very good, thank you Mark, thank you Niels. Great to have you at the Investor Day indeed. So let's start with you Niels. How is trade finance as an asset class developing? Is there anything happening or are you seeing some major progress on this track?
I think we're seeing major progress. There is a lot of positive developments. I think what we're observing is that trade volumes after COVID have really picked up. We're coming out of the slump, which is of course great for the global economy. However, where there's light, there's also shadow. The issue with that is that the demand for trade finance is growing, also a good fact, but the negative in this is that especially the smaller businesses, which constitute the majority of businesses actually around the globe, still have a very hard time finding the finance they need. And everyone has of course heard about the infamous trade finance gap that at some point was quoted by the Asian Development Bank at I think 1.5 trillion US dollars per annum. We're now at 2.5 trillion and growing. So there is still a lot to be done, but I think the overall message is this is a growing asset class. There's a lot of demand. The question is just how can we fill this?
Yeah. Okay. Mark, how do you see this asset class developing on your side?
So it's important to actually understand what the asset class is, and it's important to look that it's the real economy. So it's real goods, it's coffee, it's sugar, it's vehicles, it's toys, it's actual products and services being traded, typically cross-border. And as Niels rightly said, that gap is growing. There's larger demand, and the points is why. And the reason it is because if we look back and we understand from a macro perspective, with inflation, with the number from regulatory burdens and changes that are going on, it's meant that there's an increased demand for capital in the space.
Yeah, and how do you see this evolution match with the global trade industry?
So we're seeing scarcity of capital or a need for capital or a mismatch basically from what a borrower and an actual corporates are looking for and what's there from a liquidity perspective. So we're seeing more and more interest and need for finance, but on the other side from an actual new investor and liquidity provider, there's a greater interest at the moment in private credit. And so if we're seeing more funds, more mid-market banks come into the space and deploy a greater amount of their actual book into the space.
And we often hear when talking about SME financing about alternative lenders, indeed, or non-bank, as you say. Could you describe those?
Absolutely. So it's very important to understand that there's a relatively small number of banks which are funding into a relatively large gap that Niels spoke about. And so outside of Fortune 500 or large corporates and blue chips, actually that mid-corporate or SME space, they're the same. So in effect, they are growing companies looking for further credit lines. And from an onboarding, regulatory, KYC perspective, it takes time. And the growth of those businesses with inflation and everything that is going on globally in the world it means that there is a big funding gap. So alternative lenders are stepping in, and we're seeing more and more come into the market to basically fund into that gap, fund SMEs all the way through to large corporates and provide greater capacity at smarter but also faster.
Yeah, okay. So Niels, on your side, we hear many promising developments, but how can we scale this market to really legitimize this trade asset class?
Yeah, so as we have established, there is a huge demand for additional funding, and the question then is how do we fill this? And a large part of that funding we think will come from non-bank investors, those alternative funders stepping in where banks cannot or do not want to fund. Well, what do these funders need in order to really fill this gap? They need two things chiefly. One is transparency and one is standardization. So transparency is important because you really need to understand what's happening in your portfolio. To give you a very concrete example of a portfolio that we're seeing on our platform, that's 400,000 invoices to be funded on day one. Yeah, there's no way that you can deal with this on a spreadsheet. You need technology to help you, and there's already the answer to this question. You have to bring in technology to create this transparency. The other issue is the standardization. As a non-specialized funder, as a non-bank funder, I cannot go out and buy 400,000 individual invoices. I need a way to package this, to transform these invoices into an investable product. And again, that's something where technology can help. That's something actually that we at TradeTech do. We provide both these aspects, the standardization and the transparency that you need to really understand what's going on in your portfolio.
Okay, impressive figures. So we definitely see scalability at institutional level. So now we need to see scalability at market level. How do you see this developing over the next 5 years?
So just rightly what Neil said, we need more standardization, because if we look and we take a step back again and we look actually versus a property which might sit there and someone might fund at a certain level, actually if we're talking about trade and receivables finance, which is typically cross-border flows, there's a need to actually understand and make something which is got a layer of complexity standardized. So that is required, but also we need more funders coming into the market, and with that, that's just increased education, more proof of concepts which are going on in the market with mid-market banks, new institutional investors, and also increased education, understanding and breaking down the different gaps within those funding flows. And so I think all of that is happening, but it's there's a large basically gap to fill.
Yeah, we need to attract more alternative lenders, banks as well, I guess, also attract more indeed institutional investors to scale the whole market. Do you see any roadblocks over the short term, the next 5 years horizon? What kind of issues could we still face?
I think the great element that's happened in the last few years is the rise of fintechs and the change of mindset from different banks and funders and institutional investors to actually work and partner. And I think that's what's required. And we've done it recently at Trade Finance Global on the origination side, because we're working to originate directly from corporates all the way to SMEs, and Niels is talking about the same. So actually using that technology, using that origination with those institutional investors is what's needed. In terms of roadblocks, it's very much just the view that if everyone carries on working well on a sole funder basis, then it won't happen. But if there is more working together, more education, more capacity coming into the market, then I think that will help and grow that actually. Or fill that funding gap.
Okay, Niels, do you see also any roadblock on your side from a technology perspective?
Yeah, I think the technology is there. It's the adaptation of that technology, but there is a real need for the technology. If you think about the portfolio I mentioned, not only can you have a huge number of underlying, but then all these invoices are very heterogeneous. Trade finance is a heterogeneous asset class. No invoice is like the other. It's short term. It's self-liquidating, it's revolving, so you can have a portfolio that's here today and gone in 90 days and then replenishes, although not everything replenishes on the same date. Payment dates slip, people don't pay on time, they pay a bit late, so all this leads to tremendous data volumes that you need to handle, and that's really where technology can play a big role. And the technology is there, but now we need to drive the adoption to make sure that different platforms talk to other platforms.
Yeah. Okay, well, thank you, Niels, Mark. It was very promising, already very impressive in terms of progress, and I'm delighted to have you at the Investor Day and sharing more proof points tomorrow, more testimonials tomorrow with yourselves and your clients. So looking forward to get you on stage tomorrow. Thanks for joining us.
Thanks for having us.
Thank you.
Welcome.